Welcome to my first ever YouTube channel, Anglo-Sax, where you will find all things related to financial market trading and economics. And without further ado, let's hop into our first video. So here we are looking at the US dollar CAD, and we're looking to forecast the next trading week in terms of the price movements. So currently we're sitting on a weekly time frame, and what I'm going to do is I'm going to drop down into a daily time frame, and I'm going to change this specific type of graph into a candle graph. So change this line chart into a candle chart. Okay, here we go. So what I've been looking at previously on this particular instrument is how the price has been behaving around specific levels in price. So as we can see, we have on the right hand side of this screen, we have this price, all of this, which is the price, right? Okay. So what I'm going to do is just turn on my annotations. There we go. And start looking at what price has been doing, over the last 40 days or so. Okay. So what we can discern so far is, in relation to an economic or a macroeconomic view, is that we've had weakness in the US dollar. And, I believe that's been offset primarily by the expectation in 2024 of the interest rate. So the federal funds rate to start decreasing. Okay, so they're going to start reducing the interest rate from its current rate at the moment, which is at 5.5%, I believe. And what tends to happen in these financial markets is that price action is always ahead of the news. Okay, so the market doesn't move in lockstep with what happens within the macroeconomic context. The market is a discounting mechanism. And what that means is that future prices tend to be priced in ahead of the news. Okay, so just a bit of backdrop on that. And what we can see on my chart at the moment is each of these horizontal levels. Okay, so we have 1, 2, 3, 4, and 5. And each of these horizontal levels for me represents a major key level, for this particular currency pair. And we see here that at the beginning of November, the market's been trading higher since September. So we've had this nice price action. So it's trading above these key levels. It trades above. We get up to 137, trades back down to 136, and there's some price action around this key level. It trades back up, it trades back down, it trades back up to 37. It holds and then trades all the way up to this key level here, which is 38. And then in November, based off this upward trend, this upward movement, price consolidates and starts to drop significantly. So it drops from 38 all the way down to 37. That's a 100 pip range. And then there's some more reaction as it drops down. So it starts to trade back up into these levels. And then we see now that we have a high and we have a lower high formed. Okay, so signaling bearish price action at that particular time. We come down, we trade back up, and we start to aggressively move away from this level here, this 1.370. We start to trade down, aggressively down into December, and then we get some reaction here. And this is kind of the real first piece of reaction that we have, from the end of November. We start to see price at the beginning of December, trade back up on the daily chart, and then struggling to close again. So we have a high, a lower high, that's a high there, so that's another lower high, and then we have another lower high, and we can see that on the line chart here: high, 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 lower high. Okay, so we have this kind of price action, this resistance. So these key levels acting as resistance. Price not wanting to trade higher, it's wanting to trade down into these levels. Okay, so now that we are coming to the end of December, and we've had the economic announcements out. We've had the federal fund. We've had the Fed hold interest rates. Something that's been echoed, also in the UK. I'm here in London. We've had the Bank of England hold interest rates. So, and we've also seen pressure from the dollar as well. The dollar itself has been under some pressure. Okay, and what that does in these markets, in these currency markets, it allows other currency pairs to trade higher. Kind of a risk on and risk off scenario, because if the dollar is going to fall in 2024, if interest rates are going to fall in 2024, that tends to send the dollar down. It tends to put pressure on the dollar because other asset classes become more attractive, and it just means like the large institutional investors, they start looking at where they can allocate their capital and what other types of assets are available to them in terms of capital allocation. So some macroeconomic backdrop to that. There's a lot more that I could say on that, but this is my first YouTube video, and I want to be able to unpack some of these ideas and thoughts as time goes by. So last week we had Wednesday was a very bearish day. We had the economic news announcements that came out that provided a catalyst for price action to trade lower. So we had Wednesday, we had the Thursday, and then we had Friday. We had a bit of a pullback on Friday. Okay, so we're going to be going into a new week, and we're in December. We're coming up to that Christmas run, the week before Christmas. And as I said at the outset, that what I'm looking to do in this first video is just forecast where I believe price action is likely to trade towards. Okay, so I'm going to drop down into a 1 hour chart, and this is where we are. And for reference purposes, this is how I set my charts up. So I like to have the days of the week here, and there's an indicator here which is called the day text indicator that helps me just understand where I am each day in the market. Okay, and then I also have daily separators that can be implemented through TradingView here. I think it's one of these where you can change the actual configuration on TradingView, and you can have the separators on your TradingView chart. So this is where we are at the moment. We're on Friday. This is where price closed on Friday. We had price opened in Asia, so we had the Asian session, which was quite bearish, and then we had a bit of a kickback here in London. So this is the London session here. So we had London. So from 3 a.m., which is 8 a.m. in London, we had a bit of a drop, and then we had the price action trade up into this key level, and straight away we see this reaction point here from the market. We see how as soon as we trade up into this key level, there's a reaction. Okay, and as I said at the beginning of the video, we've seen that reaction across, from November all the way up until December, how price has been trading below those key levels. So we trade up and then we trade back down on the Friday. So now we're coming into the New York session here. So 9, 10, and then we have some kind of short-term support that's been built up on Friday, throughout the New York session. Okay, so what is it that I'm forecasting is the question. What is it that I'm trying to understand in terms of Monday, Tuesday, Wednesday, Thursday, Friday of next week? And these are my thoughts. Okay, these are my thoughts. These are my opinions. This is my analysis and my forecast of what I expect this instrument to do over the next coming days, as we lead up to Christmas. Okay. So in order for me to provide an idea of what I'm looking at and a clear understanding of why I'm looking at what I'm looking at, what I'm going to do is just drop down further on TradingView into the 15-minute time frame. And I'm just going to go back to Thursday, okay? So on my TradingView chart from Thursday, taking into consideration, I'm just going to make it easy for us to see this. Taking into consideration Wednesday, so we have Wednesday, we see the price action on Wednesday, we see price come down, it retraces, or it trades back up, comes back down, trades back up, and then drops very bearishly, very significantly. And since Thursday, the market hasn't had an opportunity to trade back up, okay? To trade back up as part of the normal trading process. So markets, they don't just trade down. You know, markets do not just trade down, and they don't just trade up. They have to trade down and trade up as part of buy side and sell side. So in other words, you know, in order for the market to trade lower, there has to be someone willing to buy at those prices. And in order for the market to trade higher, there has to be someone willing to buy at those prices. And there has to be a balance. There has to be some form of equilibrium, okay? So because it's just the way that price works in this, you know, within the financial markets, price, especially in the currency markets as well, because these currency markets are, you know, they are the way in which price is delivered and it's displayed on the screen, you know, it's delivered through what we call an interbank price delivery algorithm, okay? So price is delivered algorithmically in the market, and you know, you could say it's programmable. So it's been programmed to trade within a certain way on a specific day, okay? And as a trader, I know, and if you're a trader, you will know that in trading, there are so many inefficiencies, you know, within price. And as traders, what we seek to do is exploit those inefficiencies with, you know, with our knowledge and our understanding, and you know, with the specific tools that we have to be able to do that. And that's what makes trading is the opportunity to exploit or you know, trade the inefficiencies within the marketplace itself, because both sides of the trade have to be delivered, okay? And that's why the market trades up, and that's why the market trades down. It's just to, if you think of it in terms of the market trades up, it trades back down, and it trades back down to offer price at that specific level to buyers, you know, whether that be in the interbank market, whether that be the central bank, whoever is willing to buy at that price for the market to trade higher. And if there's no one there who wants to buy at that price, then it has no alternative but to trade lower. And that's a very simplified way of thinking about it. It's a very simplified concept, but it's, you know, it's much more than that. And hopefully in future videos, you know, I'll be able to break down my trading model with much more precision, so that you can see just some of it, you know, so that you can see behind the curtain in terms of how I analyze the price action, how I, you know, go about taking trades and all that good stuff there. But today it's just really, I just wanted to share in my first video a forecast, and my goal is to upload twice a week. So the forecast for the beginning of the week, so to upload on a Sunday night, and then midweek to upload another video just to see my performance, just to see how well I'm tracking, you know, see if I'm right, see if I'm wrong, and you know, hopefully some greatness, some great stuff can come out of that. But as I said, I've jumped into a 15-minute chart, and we see this big move on Wednesday. Price has traded down, and then on Thursday it doesn't even trade back up. So it doesn't trade back up into these candles, okay, to offset any imbalance that's occurred as price has just dropped back down. See, price trades down, it trades up, it trades down, it trades up. Here, price hasn't had the opportunity to trade back up. So and it comes here. It doesn't find support at this key level, this 135, and it just drops, and then it trades back up. So it trades down, it trades back up, drops again, aggressively again. Okay, so as it's dropping down, this is what I call a phenomena within the price action, is where the price trades down, it trades up, and there's no wick here on this candle on a 15-minute chart, 15-minute candle, and there's no wick up here on a 15-minute candle. So this is kind of a phenomena within the price action. So it's very imbalanced. And what do I mean by that? I mean is there's no willingness for the price to trade up, and as it has done previously. So we have a wick here, wick here, wick here. We didn't have a wick here, but price trades above. There's no wicks, and it's left this kind of horizontal level, which I call equal high. It's too perfect, and the markets are not perfect. They're far from perfect. So there's a situation here that's a phenomena where there's an equal high situation, right? So there's liquidity resting here. The market's just zipped down very quick, hasn't traded back up to offset any imbalance. Okay, so there's an inefficiency here in the price action. So this is a level that I'm looking at, and it's right next to a key level here, this 135, okay, for my forecast over the next 5 days. So this is one phenomena that I'm looking at, and it's repeated down here. So that's 1, that's 2, and this is on a 15-minute timestamp. If I go down to a smaller time, that you can see there's some here as well, but I've left those for now. If we was to go onto a 5-minute timestamp, we would potentially find even more inefficiencies within the price action, okay? And then we have it here as well. So these are what I've marked up so far. And what I'm looking at going into Monday, Tuesday, potentially Wednesday, is for price to begin to trade above this key level here, okay, this 134. And this is my first target. This is my first profit target that I'm looking at. This is my second, and this is my third. Okay. And what I would like to see is when the market opens tonight on Sunday in Asia, is for some form of I would say momentum in the price, in the candles. So I'm looking for price to show a willingness to trade and close above this key level. Okay, so that's one thing that I'm looking for within the Asian session, and that's what I would call a conditional expectation. If that doesn't happen, if that first conditional expectation doesn't happen, and the price opens and it trades within the Asian session, and it starts to, so let's say price trades, consolidates in the Asian session, and then within these two vertical lines that I have here, which I'm going to unpack in a second, what I would look for if price consolidates, like if price behaves in this way. If price opens and starts doing this, or it trades up and it trades down like this. So in terms of my conditionals, what I'm looking for, a conditional expectation, this would be one condition. Before we get into this area, this would be one condition. Another condition would be that, price opens, that the price opens and then it does this, and it makes a run for this key level, right? That's the second condition, sorry. So first condition, second condition. And what I would like to see is either one or two of these conditions for me to be able to gauge a potential entry, as I look to see price trade up into this level, and then by the end of the week, potentially up into this level. As you can see, when I say levels, I just mean profit targets. So these things here, these where it says EH, that just means equal highs. So there's 1, 2, and there's 3. So My expectation going into next week is that I can enter my trade during the London session or the New York session in and around this area, in and around this area here. Okay, so my first condition is that price consolidates and it trades down back into this area in my time zone. So this represents my time zone here, 12 a.m. to 10 a.m. New York time. And that's just 8 a.m. GMT London to, I believe it's like 3 or 4 GMT London UK. And then basically what I'm forecasting is that price next week is going to trade back up above this key level into these areas here, up into these candles here. That's my forecast going into next week. And based off my first condition, so price consolidates and it trades down, and then as it trades down into London from Asia, so it consolidates in Asia, trades up, and then trades down into London, and then we get this nice push in London, and it starts pushing above this key level and closes above this key level. That's what I would call the perfect condition that I'd be looking for. Trade up, trades down, and then starts to push away in the London session and wants to close above this key level. I'd be looking to take trades in and around this area, in and around these prices down here. And then going into Tuesday, if that doesn't happen on Monday, I'd be expecting similar kind of behavior on Tuesday. But by the end of the week, what I'm looking for is for these areas here with this imbalance in price, for these levels to be as price targets, as profit targets, so to speak, for these levels to be tapped. So for price to get above here, and trade up into this leg down here for next week. So I'm not expecting price to get all the way up to here, but at least find itself up to this level here, this 35, by the end of the week. So that's my forecast. We'll see how it goes, and as time unfolds, I will give much more insight as to why I have this window across here, this time frame across here, and hopefully as this channel grows and this content, you like this content, I can share more about my trading model, and then hopefully share some of the tools that I use to be able to forecast price movements and direction of the financial forex pairs. And yeah, so guys, that's all for now, really. And I'll check back in midweek with a video, probably off the back of Wednesday session. I'll get that uploaded for Thursday. So I'll record for Wednesday. I'll record Wednesday session and I'll upload that on Thursday. So there's 2 videos coming out weekly on my forecasts for this exchange rate at the moment. And yeah, so thanks for watching. You can also find Anglo-Sax on Instagram. You can find Anglo-Sax on Twitter and also TikTok. If there's, let me know if there's anything that you like from this first video. Please feel free to like and to subscribe. And without further ado, I'll see you in the next video. Thank you.